What would be your ideal partner? Think about that in your head. Like, think about what your ideal partner looks like when it comes to your money, when it comes to stability, when it comes to control, when it comes to guarantees. Welcome back. So today, Jeremy, we're going to jump in and we're going to talk about the importance of partnership, right? Seth Godin once said, you can't work with someone until you actually work with them. It makes a lot of sense. It stuck with me. It's so simple. When we get married, we go on dates. When we buy a car, we test drive it. When we buy a home, we typically do a walkthrough and have an inspection. But most people, when it comes to their money, they just don't think about what they're doing with their money. So, Jeremy, let's talk a little bit about what people are going to learn in this episode.
Yeah, so most folks focus on what infinite banking is, but very few of them end up understanding the importance of who they're practicing the infinite banking with. This episode is going to be a wake-up call for a lot of our listeners. It's going to help them understand that the IBC strategy that they're choosing really hinges on choosing the right life insurance company, as well as the strategists they use. So the partnerships today that we're going to talk about aren't necessarily your business partnerships in the traditional sense. It's who you're partnering your money with in your banking system. Who are these insurance companies? And what are you going to learn today? So you're going to learn the critical difference between stock companies and mutual companies, how to evaluate a life insurance company before you start your infinite banking process, the six traits that mutual insurance companies look for a lot of ideal policyholders. So are you a good fit for them? Not are they
Mm.
just a good fit for you, but are you also a good fit for them? And then kind of the process of getting approval and what that process actually looks like.
And Jeremy, thanks for giving a little bit more context about what we're talking about. We're talking about partnerships, and one thing, that some of the more seasoned IBC practitioners, like I heard on some of my posts and things, when I was bringing it back to the simple fact and the simple base I want to talk about, is how we're talking about how this, at the end of the day, is nothing more than permanent life insurance. But you have to add the part that the practitioner, like Jason, don't forget, it's with a dividend paying, mutually owned company. And we're going to give you a couple additional caveats of how we qualify the different partners that we find for all of you, but also why it is just as important for the company and for you, the potential banker, to be the right fit for them. So, Jeremy, let's start there. Let's start with talking about why we're assessing, or what we're assessing when we're looking for the right partnership, what we're looking at as the foundation for these type of partnerships before we even talk about, like, what are they looking for and how does the process work?
Yeah, so most companies that can really be divided into two type of companies. You have stock companies and you have mutual companies. And stock companies, they're there to support shareholders, right? The policyholders, they all become secondary. But with a mutual company, guess what? You're a shareholder. You're a part owner of that company. So you get to participate in the profits, you receive dividends, and you benefit from the long-term thinking, where these mutual companies think in decades. Stock companies, in contrast, they think in quarters because they're
Wait,
trying
wait,
to
hold
get
up a minute. Hold up a
shareholders.
minute. Wait, you're saying some cool stuff, but I'm getting a little lost. You're saying in a mutual company that we're an owner? Was this like the Green Bay Packers? Are we get season tickets? Like, what do you mean we're an owner?
I guess you can think of it kind of like that, but yeah, your contract is a ownership, right? It's an ownership stake that you have within that company. So when they declare dividends, you're going to end up getting a dividend disbursement, and we take those dividends, and the way that we engineer them is go back into the cash value because we want to make sure that you're not going to get taxed on these, right? We want to help you access all those gains tax free. So we take those dividends, those profits, and put them back into the company. A lot of the dividends are categorized by the IRS as returns on premium. I don't care what you call it, so long as I end up getting the money back and I can access it tax free.
Hallelujah to that. Like, we don't really care what you're calling return of premiums. What we want to be tax free. We want the growth and the consistency. So when we're talking about having it be a mutually owned, dividend paying whole life company, it's because all of those words important. I get tired of saying them, Jeremy. I really do. But it's important that we say and emphasize them every single time because it shows you clearly what it is not. And what it is not is a stock company, stock owned company, because that, like you said, is beholden to the shareholders, meaning that the shareholders are number one, meaning that when there's a dividend, that if you get anything as a policy owner, it's going to be greatly reduced because they're going to look out for the shareholders first, which in a stock company is not us. It's not us, the policy owner.
Yeah, absolutely. Let's take it another step further, right? We don't just work with mutual companies. We only work exclusively with mutual companies, but these mutual companies also have to have an A rating or better on the Better Business Bureau. And their dividends, they've had to been paying dividends consecutively every single year for the past 100 years. So if you think about all the wars, the pandemics, the recessions, the depressions, every single year they've been paying a dividend. And why is that? It goes back to what we just said. They think in generations, not in quarters.
and and they're only betting on one thing. When we're looking for this foundational or foundations criteria, the structure, the bottom of our pyramid, because remember, we're helping you all take back control of your money. We're helping you secede from the existing system. But we're going to say, what kind of partner would you guys want? What would be your ideal partner? Think about that in your head. Like, think about what your ideal partner looks like when it comes to your money, when it comes to stability, when it comes to control, when it comes to guarantees. And so, like Jeremy just said, it's mutually owned, it's dividend paying, and it's been operating profitably for over 100 years. Most of them are well over 100 years. We're talking 119, 137, 148, 160. Like these companies have been profitable every year through all the stuff that Jeremy just mentioned. You can't think of a time, whether it's the Great Recession that we just talked about in another episode, or it's the Great Depression, which my grandparents lived through, or the wars, any of them, or the pandemic, whatever it was, they've been profitable. I think that's impressive. And Jeremy, why is that? Why are they so profitable? How can they be so successful?
Again, they think in generations. They're not thinking in quarters. These companies are built on a foundation of long-term thinking. And it's one of the things that we try to implement in our lives, as well as get our listeners to start thinking about. How are you thinking long term? We recently had a podcast guest, and it'll be aired on a future episode. But when he talks to people, he tries to align their current today actions with their long-term thinking, right? If you think that in 5, 10, 20, 30 years from now, how is life going to be? What are politics going to look like? How are taxes going to go up? If you want that stability, you should be looking at the current actions that you're taking today. And one of those actions are partnering with these dividend paying mutual insurance companies that do whole life insurance. And it is a mouthful, but words have meaning, right? Words have meaning, and each and every single one of those words is there for a reason.
And so let's not get lazy. Let's not do what I did, call myself out and call it just permanent life insurance. But I want people to understand that you're asking for whole life insurance, meaning that you're asking for a guaranteed legacy, meaning that it's not term, it's not tied to a market, it's not these other things. Just so people understood, it was something that you had to be the right partner for them. I want people to understand the importance of what it is that we're doing when we're using this system for banking.
Yeah. And guess what? Whole life is just the skeleton, right? Not all whole life policies, though, are engineered for performance. And that's where getting with the right strategist really comes in. On a previous episode, it was episode 14, where we talked about the dangers of using index universal life and how people try to use universal life and market it as infinite banking. But those sort of policies, to include working with stock companies, they just introduce market risk to you, that sort of volatility. And you don't want volatility in your banking system. So if you're going to build a banking system, you need control, not exposure. And that's why working with a mutually owned insurance company with uninterrupted dividend paying histories is so important, along with structuring that next partnership with the right strategist. Who are you using to help engineer these banking systems? Is it Jake from State Farm? Is it
Jake
your
from State
broke
Farm can't do
uncle?
this, Jeremy. You're getting ridiculous with that. People are hearing that. I love that joke. People laugh every time we say it. I hope it's not Jake from State Farm. He can't do this. That guy, he can do commercials. He's on with some pretty famous people, but he's definitely not specially engineering policies for you.
Yeah. So, Jason, going into the next section here, what should a lot of our listeners look for when they're working with an advisor, or we call strategists? How are they aligning their infinite banking strategy and making sure they're working with the right person to engineer these policies? Because they are uniquely engineered at the end of the day.
And let's start off with what they're not looking for, because I get a lot of insight. I've talked to a few different people who have sold IULs this week who are looking to learn about what we help people with now. And they were shocked that they wanted policies and I wouldn't start them, Jeremy. And you know why I wouldn't start them? I wouldn't start them because they weren't ready. They didn't have a basic understanding. We're teaching people a process more than anything else. This just happens to be the vehicle we're using to teach someone a process.
Hmm.
And so, that partnership for them, there has to be a company that's supporting infinite banking, that is aligning with the core values, that is helping them their thinking. So when we're looking for the right strategist or mentor or whatever you want to call us, the person has to be in service of you. Hopefully, they're Nelson Nash, infinite banking certified like Jeremy and myself. There's only 310 active certified practitioners, which is a really small number. I thought it would have been much bigger than that, but it's optional training. But the first thing is you want to make sure that the person is using a policy in their life. They're doing the thing, drinking the Kool-Aid, they're doing the thing that you're wanting to do in your life. So they can kind of share their journey, their story with you. They can give you different contexts, they can give you different uses, whether you're eliminating debt, whether you're saving for purchases, whether you're building wealth for, creating cash flow, right, for investments, or you're just really concerned about generational legacy, because all those things are what this offers you. And so find someone in mentorship that has your goals first, but they're more concerned with teaching you the process, making sure you read this book, which we show every single time. And remember, if you're going to be listening to us, we're going to repeat things a lot. You know why? Because you're training. If you're not talking to us yet to test yourself, to do the thing, to take action, then you're still training. So we want to make sure that you're reading Nelson's book, and we'll even tell you how. And if you don't find it valuable, we'll even buy it back from you, because we'll pass it on to someone else that will use this information. They will think differently. They won't go along with things. So, Jeremy, you asked me a very easy question. I'm giving you a very long answer. But at the end of the day, it's about where are you today financially? What are your habits? Are your habits supportive of your journey to become your own banker, your own banking system? Because it's a verb. It's not just you're getting a policy for this. No, you're going to do the thing.
Yeah,
What else?
in episode 11, we actually go a lot further in depth on working with the right strategist, right? Because if you work with the wrong strategist, it could literally cost you thousands, if not tens of thousands of dollars. So if you want to learn more about working with the right strategist and what you should be looking for, tune in to episode 11. Go check out a previous episode. A lot of these build off of each other. But working in the right company is going to give you stability. You want to make sure that there's dividends, you have full control over your system, over your money, and working with the right strategist is going to engineer those to give you the correct, I call it a financial flight path to success.
I love that. And I look at the middle. Like I always think in triangles, Jeremy. So when I think about, infinite banking, it is not the thing that is going to create your wealth. It is the foundation to build upon for all of the needs, all the banking needs in your life, all your finance needs in your life. And so the middle of that pyramid, the stronger together criteria, aligning your values. Find a strategist that is aligned with your values. Find someone that you like. I mean, this is a whole life kind of thing. So find someone that you want to be around that kind of draws you in, whether, it's Jeremy, myself, or one of our other IBC practitioners. Find somebody that resonates with you, that aligns with your core values. And these companies that we partner with, they support the Nelson Nash Institute. They all showed up at Think Tank. So that's part of our criteria. And their leadership and their staff owns these type of policies. They're using them in their own lives. So again, not only are we practicing it, but the companies that we're partnering with for you are also practicing it.
So what are these mutual insurance companies? What are they looking for in an ideal partner? How are they making sure that we or our members are a good fit for them? Because again, they think generationally, right? They're not thinking in quarters. How are they making sure that we're a good fit to be owners within that company?
I love that question. And think about if you think about Nelson's core teachings, like the first one is his first tenet, if you will. Think long term, think long range. So they're looking for people who want that whole long-term commitment because it's your whole life. It's not a term, it's not a period of time. You're committing for the rest of your life to be a partner with them. So they want someone who's committed. And Jeremy, just a fun thing that I thought about since I first we talked about doing this episode is a lot of people, I've been finding it interesting that people don't have any qualms about committing to a 30-year mortgage and then refinancing that mortgage and committing to another 30 years. Or, I asked this question a couple of times this week. Have you ever in your adult life not had a car payment? And when we think about that, you're committing in both of those situations to have a certain amount of money leave your home every month on a consistent, persistent basis the whole time. But Jeremy, the crazy thing is who's in charge of that deal? Like who's in charge of the mortgage, of the car loan? Is it you or
The bank. So it's
the
it's going to
bank?
be it's usually the money's got to come from somewhere. It can either start coming from your system. And again, you don't have to be wealthy to start. The only thing you have to do in order to start is be committed. You need to be responsible and you need to think long term. But over time, as you start recapturing that interest, recapturing those fees, you're able to start building up your own banking system to where you can become your own banker, where you're not relying on these third-party debtors and creditors and going out for loans and creating essentially a system of false or inflation, an inflationary building system, right?
Mm.
So the money's got to come from somewhere. And man, I didn't think about that. People do commit to 30-year mortgages and paying a car payment over the long term. But when it comes down to their own banking system, are they aligning their long-term thinking with their today habits? Are they connecting the dots? Are they becoming their own banker?
And thank you, Jeremy, for noticing that. But that was just a question I got curious about. I'm like, wait a minute. Everyone I'm talking to has a mortgage. Everyone I'm talking to has a car payment, at least like the majority of the people I'm talking to. So why are they afraid of committing? Because they're looking at this as a cost. So these mutually owned companies, their partner that they want, their ideal partner, if they're drawing up who they want someone that's healthy, that's taking care of their structure. They want someone that is committed long term. They want someone that cares about, like, has people that they love. They want stability. They want financial discipline. They want to see that in their records. They want someone that wants to control what's going on. They want the guarantees. That's important to them. And they want someone that's a builder. They want someone that's looking to leave the world in a better place than they found it.
They're actually empowering you through the policy loan structure to become a builder, right? And they want you to also demonstrate financial responsibility. Warren Buffett's got a great quote out there about when the tide goes out, you'll see who is swimming naked. Okay.
Mm.
Now, are you a type of person when the tide goes out? Are you swimming naked? As in, do you have risky financial behaviors, either consciously or subconsciously? Are your unconscious decisions sometimes jeopardizing your long-term wealth building? And that's built on habits. A lot of us, like you said, we're used to having a car payment. Those are habits that you built in the short term, but they have long-term effects. Another big one are our deal members for these folks. They want to have cash value accumulation. Like, do you value that? The mutual insurance companies, they created this feature as a loan provisions for you to be able to access your money to become a banker. And the growth of this cash value is very, very key component to practicing infinite banking. That's one of the reasons we like using the product of dividend paying whole life insurance because it has guaranteed loan provisions inside of it. It allows me to access my money today without anyone coming between me and my money, right? So
Mm.
I'm the banker. I'm not going and asking for a loan from Wells Fargo or Bank of America or one of these other big banking companies that's probably going to put a hit on us at some point for constantly telling folks to stop using them.
Mm.
Start using your own system instead.
And I love how you're just telling people, like, stop using them. Use your own system. Think about long-term, long-range thinking. Think about 30 years from now. What would it feel like? This, if you're listening, if you're not driving, pick up a notebook and write this down. What would it feel like to not, if you're a business owner, an entrepreneur, a parent, what would it feel like to not finance the things that you're going to buy anyhow through a banking system, to not pay someone else interest, to keep all of that interest in your family bank. Name your family bank. Write that down too. Just think about the long-term freedom because that's why you're here. You're here for a feeling of freedom. You're here because you recognize that some of the patterns you currently have need to be retrained, need to be broken, need to be set up for a more optimal outcome in the future. And it really starts with our thinking. And this is so simple, what we're telling you today. It's something that's been around for hundreds of years, which is 3 to 4 times as long as most of the systems that you're putting your money into today. A lot of people, and I have no judgment against where the money's going. We're not diving into that today because we've done that, like Jeremy said, on other episodes. But for this episode, it is thinking about, well, hey, yeah, it is a whole life insurance because the first dollar is buying insurance. We're just building them for cash value. So it is about the long-term benefits, but we're building them so you have a banking system.
Yeah. Another trait or quality for that these mutual insurance companies want is to ensure that you have a desire for financial independence, right? Now, if that does sound like you need to ask yourself whether or not you're being proactive about managing your finances, whether or not you seek alternatives to traditional banking systems that have stripped you from control. Now, a lot of us, we're grown up, we're taught to put our money in a system. When I was a little kid, I had a little piggy bank, an actual glass piggy bank, and I put the money inside of that, and I was building financial habits of saving. But then when the piggy bank would get so big, what would I do with it? I'd go and I'd put it in someone else's bank, Jason. And
Hmm.
that was a habit that I built
Yes.
from when I was very, very young. I wasn't building one of financial independence. I thought I was doing the right things, right? But I was stuck in this loop that I was brought into. I didn't understand the value of true financial independence, of breaking free from a system and creating my own system of independence.
It's kind of nuts, isn't it, Jeremy? We make money, and like you just said, from the time that you were a young Jeremy with 3 younger sisters, and you're saving in your piggy bank. Was it an actual pig? Like Connor has a turtle that was on my desktop. Patty said, "Man, you have too much stuff on your desk. Why do you have this little turtle here?" And I was like, "Well, Connor put it there," and I felt kind of bad putting it back in his room. But like, was yours an actual pig?
I actually had a couple different types of ones. My favorite little piggy bank, though, was actually a secret one. You remember back in the day when we had disposable cameras? I had a disposable
Yes,
camera.
Jeremy, I'm older than you. I do remember Polaroids and disposable cameras. So yes. So
This particular one was kind of like one of those James Bond cameras, and it actually had a secret compartment in it. I could actually hide whatever James Bond was trying to hide in it. I don't know. But me personally, I was putting in like little dollars from selling frogs. Because again, I used to sell frogs to the neighborhood kids and take their allowance money. And then I'd stuff that money away into a secret compartment and a disposable camera.
did you feel guilty about selling frogs?
No, dude, I loved it. It was a double-edged sword because my mom was terrified of frogs. And so I would have this box of frogs that she would just freak out about. Like you try to put them in the garage, put a cover on it so they don't get out. My mom would go out there to the car and she would yell at me and scream. She was on the side of the neighborhood parents who were also like, Jeremy, you need to stop selling frogs. Like, get these frogs out of my house.
Jeremy, mom terrified of frogs, little secret compartments, hiding dollar bills, selling, taking the neighborhood kids' allowances. And I wonder why they were getting allowances instead of working for money. Were we creating, like, was that something that was, another thinking thing that's not helping our kids because you're turning them into socialists? You're like, oh, you're going to get an allowance just for being alive and maybe doing some chores. No, have your kid do something of value to you that you'd pay someone else and have them earn money for that. Have them do tasks, whether they're brain tasks or this task. But that's not what we're here to talk about, Jeremy.
Well, I was a
So,
capitalist. I was selling frogs. I wasn't necessarily taking their money. I was selling them frogs, and they were giving me money in return.
what
So
if
I've been
they
a
got away?
capitalist
Did
since
you
I was
catch the
very
frog
young.
and sell it to them again?
I mean, if the frog got out or the parents released it, I'm not going to say I didn't catch the same frogs, but I didn't have a tagging. I was like 5, 6, 7 years old. I was young.
So everyone here is listening to what is the mutually owned company looking for? Another thing that they're all looking for is they want a client that has the shared values that they have. Remember, mutual companies started for the benefit of the society, for the protection of the person that was going out and earning for the family, taking care of the family, protecting the family. That's where whole life came from. Like it started mutual society started back in from my research, like Benjamin Franklin with fire, right? And then he went from that and brought it into life insurance. And so, they're looking for partners that care about the community. They're looking for people that have shared values, like their integrity, their discipline, their focus on family, their commitment that reflects back to the values of the mutually owned company. Like when I sat in a room for the first time, the first event I went to, because I used to tell Jeremy people 5 years ago, if you asked me if I'd be doing what I'm doing today, I would have said, you can punch me in the nose. That's the dumbest thing I've ever heard. And then every time I'm around people that do what we do, I'm like, these are my people. This is so weird. And why? Because the values are aligned. The things that we care about are the same. And that's what they're looking for in their partners as well. So if you're in it for a quick buck, if you're in it to get rich quick, if you want to get in, get out, if you just want to try it on, that's not what they're looking for. They're looking for the commitment, the values, the discipline, the persistence, all the things, right? So,
So let's say that our listener says, hey, I'm all of these things, and I'm willing to work with a mutual insurance company that's been around for over 100 years, consistently paying dividends. What's the process? What's the next step, Jason? Talk us through or walk us through the kind of the application and underwriting process? Because again, these banking systems, they are a privilege. They're not a right. And the reason that these companies have been around for so long is because they conduct underwriting. And at the end of the day, there's a core product that we build banking off of. That is whole life insurance. So can you tell us what's the first step? Outside of
so
I picked the strategist, I picked the mutual insurance company. I did those two things. I've committed to the process. I think that I'm a good fit. I have these values. How do I implement this? Like what do I got to do?
well, you go back to that right mentor that you found that it's helping you. I like to talk about how we want to, if you're a builder, you're connecting where you're at today. Like we have to start where you're financially today. I understand that 10, 20, 30 years from now, you want to be here. You want to have passive income. You want to have all the things happening. If you're not there yet, we're going to start at the beginning. If you're there, cool, we can start there too. It just depends on where you're at in that journey of your financial, I guess your financial journey. I'll just call it for now. I don't have a better languaging around it, but you want to start making sure that someone is solving what you're most concerned about today while tying that to where you're going to go in the future. Because, like anything, if you're going to be a banker, you have to do banking. You have to be on top of your policy. You have to know what's happening in your policy, which we supply that help and that education as well. But you want to find someone that's going to tie solving your problem today and tie that to your long-term vision and try to marry the two together. So then now you have the proper structure. And then we're going to start an application, right? We're going to ask you some basic underwriting questions about your health, about your finances, about your behavior, and about your background. And we're just going to really dive in and make sure that you fit all those criteria. But I know you, the listener, you guys already do. Like you're all of these things that they're looking for. So once we do that, you have your application call. Usually takes about 30 minutes. They dive into your family history. And depending on what we're applying for, depending on your age, depending on where you're at, a lot of the times you're going to do a paramedical. You're going to do your height, your weight, your blood, your urine, right? I like to joke around, Jeremy. I don't think you've heard me say this before, so maybe you'll get a chuckle, maybe like a groan. I'm not sure. But we just want to make sure that you're as pretty on the inside as you are on the outside. That's all. That's all. And so then from there, underwriting's going to finish up. And then what happens, Jeremy?
So even during that underwriting period, right? Like you said, they're looking at scrubbing your body, make sure the inside's just as beautiful as the outside. I love that. I did find a chuckle in that. But guess what? If you do have a family history, don't rule yourself out, right? Never ever self-eliminate. There are things that you can do to improve your health, whether that's improving your BMI, your lab results, kind of these like setting the stage, so to speak, for your health underwriting. But even if you're not approved, let's say that you do go through the underwriting, the health screening process, and you're not approved, guess what? You're still not out. There's usually someone else, either a business partner or an immediate family member, who is insurable. And so long as you have what's called an insurable interest, we can end up working to help you become a banker through the product itself at the end of the day. So again, even if your insides through like I work with a lot of military, right? We've got disability ratings, we have exposure to toxic fumes. There's a lot of things going on that some folks aren't necessarily insurable, but that doesn't mean they can't practice banking. at the end of the day. So I want to make that very, very clear. Never, ever self-eliminate.
And if you and we can always ask, like, come prepared to share the most background that you can, the history, if it's a medical history and whatever it is, and we'll find out from the company if you're insurable. Like, we will ask those questions for you. Like Jeremy said, don't make the decision based out of fear and uncertainty. It's worth having a conversation. Like, if you're able to provide this kind of legacy for your family and get approved and it works for banking, we'll tell you. We're going to guide you. The right mentor will guide you in the right direction to make sure that you're not self-eliminating. You're finding out if you're insurable. And if not, I've helped plenty of people, Jeremy, where they've went to another family member, another insurable interest, sometimes even, an adult child if they're older and they weren't able to get approved because of pre-existing conditions. So there's almost always a solution.
Yeah.
There's
And that,
very,
again,
very
that's why
few
it's
cases where I haven't been able to come up with a creative solution to help someone implement the process of banking.
and that gets back to I chose the right mutual company. Did I choose the right strategist? Because that strategist is that key between you and the underwriter at the end of the day. And because we've worked with so many different people, we understand what it is the underwriter is looking for. We can help bridge that gap between understanding, right? Because they're looking at what's on paper, but we humanize your application at the end of the day. So now that we got the health underwriting out of the way, what's the next step? Financial underwriting, right? They're going to start looking at, can you commit to this long term? Again, they think generationally, they don't think in terms of quarters. So they're going to look at your income stability. Can you afford your premium deposits in the long term? Sometimes, based on how much you're being underwritten for, they might look at your net worth or even the purpose of insurance, whether it's for wealth building, estate planning, or family
Hmm.
security. A lot of business owners can actually qualify for higher coverage. Now, this is not Uncle Sam at the end of the day, right? This is a private insurance company. It's a private conversation between you and them. They're not reporting these findings to the IRS. So for a lot of my business owners out there, don't think that, hey, you're going to end up taking a look at my financial, like what's behind the hood, and Uncle Sam's going to find out. They're not. Again, they're underwriting you from their perspective. They're underwriting you for life insurance. They're not trying to tax you at the end of the day. Again, you're a part owner of the company. They're looking out for your best interest and looking out for the best interests of everyone else as well.
Which, if you think about, that's what everyone that's listening that wants to participate, like that was Nelson Nash said, hey, someone asked him, what's the risk, Nelson, in infinite banking? And he waited a moment, looked around, said, not participating, not participating. So if you're thinking that this is something that you want to participate in, well, then find out, find that right mentor, start the journey, find out if you can be underwritten, and the security you have and the control you have, if the company's been profitable every year and you have 88 to 89% of people getting approved and other ones being able to find a solution, well then isn't that the right partner? You want people that don't have that stability, that don't have that background, that's going to be the right fit, not getting approved, because otherwise the company wouldn't have that stability for you. It wouldn't
Mhm.
be the safest place to put your money. It wouldn't be why banks have $225 billion plus of bank-owned life insurance.
Yeah. And guess what? Just to be clear, for all of my policies, and I also build these banking policies for high net worth individuals. We're talking about real estate investors, we're talking about airline pilots. Not once have they asked for tax returns. There is a threshold where, based on your net worth, they might ask for them. But to date, whether it's mine or the people that I've helped, they haven't asked for your taxes. A lot of this is self-reported. So it's self-reported income, it's self-reported net worth. It's not until you get above a certain threshold where they end up saying, all right, above this threshold, we want to start looking into this deeper. So again, you're not finding your tax returns, you're not digging through your shoebox full of receipts. This is a lot more simple than you think it is.
100%. It's really simple. So what's next? So we've gotten approved. Now you've reviewed what you're approved for. You've learned exactly what that means, what that commitment is. You've made sure that it is the best plan for you. Now you've requested it to be issued, right? You've said to the insurance company or to your person, hey, go ahead, insurance company, issue my policy. Go ahead and send me that contract so I can review it, sign it, and fund it. What's next, Jeremy?
Yeah. So if we're looking at that next process, your policy actually isn't even in force until you actually fund it. So you have typically about 4 to 6 weeks of the underwriting process, which is what again why we say start now. You don't have to have all the answers today. You're going to have about a month, month and a half to go through this underwriting of health screening, where again, they're pouring into the data, they're looking at your finances, they're even going to look at your lifestyle. We didn't cover that, Jason, but they'll look at, all right, what's your occupation? As an airline pilot, I fill out an additional form that basically says I'm a professional, not a Red Bull pilot out there that's doing
Hmm.
barrel rolls and doing risky behavior. Mine's more like point A to point B. But when they do all of this sort of underwriting, that 4 to 6 week process is also part of your education. That's where you're talking to your strategists. That's where you're getting the know-how on how to implement the strategy that we personally help you build. Again, we're not building it, we're helping you build it at the end of
And
the
that's
day.
when you're reading, if you haven't, or rereading Nelson Nash's book. That's when you're really getting dialed into your discipline of what you're committing to. And then at this point, like once, remember, all we've done so far is go through the trial application, get you approved. And like Jeremy said, nothing's really happening. You're not a banker until your policy is funded, until your policy is active or what's called in force.
Yeah. And then once it's in force, guess what you're doing? You're just funding it consistently. Again, it's a banking system. We look at them more as premium deposits. They're not payments. You're depositing something into a system that you control. And then when an investment opportunity arises, a business opportunity, or heck, an emergency, you can borrow that cash value instead of going to your traditional savings or going to a bank that you don't control. You're not begging for money from some other institution. You're actually getting it from yourself. And that money that you end up getting is borrowed from the insurance company's general fund, which allows your cash value to continue growing at an uninterrupted compound interest rate. So that's part of that process of why we like using mutual insurance companies, using whole life products, because those policy loans allow you to take policy loans from the general fund of the insurance company and then use that money to fund an opportunity or serve as an emergency in the event that something happens. But Jeremy, hang on. Why would they allow me to do this? Because that cash value is your net present value of a future death benefit. Meaning, if you never put that money back into your banking system, when you graduate, as Nelson Nash says, when you leave this plane of existence, that death benefit is just deducted by the amount that you took out. So it's a net present value of a future death benefit. You're able to access a portion of your death benefit today. You're not waiting until after your life in order to access it. And that's one of the reasons I like calling it life insurance. It's meant to be used while you're alive. It's not death insurance. Okay. So get around that. It's life insurance. Use it today.
Yeah, use it today, use it for your living, use it for the things that you want to create today. And said easier, what Jeremy just said, you're saving in one hand, like your premium deposits that are going in, they're saving and growing at a guaranteed rate and most likely earning dividends. You're spending someone else's money. You're using the general fund by borrowing against the cash value created from what you've deposited. And then you have the guaranteed death benefit as well. So if you have three cups, that's how you're thinking about it. You have a premium deposit cup, you have the cash value, which is the insurance company's money, and then you have your death benefit cup that's also guaranteed. So right there, you got two guarantees. You got guaranteed premiums. You have a great partner that's been profitable every year, and all you're committing to is to be a great partner back.
Yeah. So I think really the key takeaway for our listeners here is that your infinite banking policy is only as strong as the company behind it. All right. When you choose the right partner, which is a mutually owned, dividend paying whole life insurer, you're not just buying insurance, right? You're aligning with a company that prioritizes you and that you're also a good fit for that company, a company who's thinking generationally, not in quarters. And what do you have to do? Because you're an owner of that company, you yourself also have to think long term.
And Jeremy, that's it. And that's when it actually starts. Right now, congratulations, you're approved. You are set up to become your own banker. But guess what? Banking is a verb. That's why it's called becoming your own banker. Not your own bank, it's your own banker because it's a verb. So now the action starts. Now you are doing all the things to build an opportunity fund, to pay off debts and recapture the money, to create generational legacy, to make purchases, to make investments, whatever you're going to do financially. Now your journey starts. And that's when mentorship is even more important to understand what's next. Now, you want guidance. You got to think for yourself. You got to rethink your thinking. but now the journey starts. Jeremy, anything else to add? Now we've walked away or walked through who the partnerships were, what they're looking for from you, what the process is, and now we've just outlined now the journey actually starts.
Yeah. No, I think that pretty much sums it up. We do want you to, tune into future episodes, listen to the client journeys. When we bring on a guest, they're going to tell you about their story. They're going to tell you where they were before infinite banking, and then where they are today along that journey. And at some point, whether you've already started and you're further along, or you're still waiting to think about starting, right? Tune in. There's going to be someone that's going to resonate with you. I've been through the process. Jason's been through the process. Guess what? We're still on the journey ourselves. Okay. It's like this is forever going journey. Like the most important thing is we started. We decided to take the first step. And if you're on the cusp, if you're thinking about getting started, we hope that this episode kind of reveals a little bit more about who you should start that journey with, and then what that initial first step is going to look like.
And that's it. It is a commitment to mastery. And whatever level of mastery you want to commit to, just know it's about that long-term vision, that long-term thinking. And so like Jeremy said, we're just on the journey with you. We might be a couple steps ahead or a couple steps behind. I don't know where you are on your journey because there's a lot of people out there that have more than 4 policies. I have more. I'm not sure how many Jeremy has, but you have more or less. It doesn't really matter. Don't compare yourself to someone else. It's about your journey and your commitment to yourself and to your future generations. So with that being said, Jeremy, I want to wrap this one up. It's been a longer one, but I know there was a ton of critical information here to really help support your journey. Jeremy, I think you got a new tagline for us.
Yeah. So we started thinking, typically on the tag outs and the tag ins. I don't know. I'm thinking of wrestlers right now, but we haven't really said anything, Jason, outside of, take care. But
I usually say be blessed, go learn more, something like that. But yeah, it's fair. What
yeah.
do we got,
So
Jeremy? You're
so
keeping me in
what I
suspense.
came up with, and let us know what you think about this. But if you haven't started the process yet, guess what? You're already in banking. You're just not the banker yet.
That's it, Jeremy. So be blessed. Thanks for being here. Go check out other episodes. We'll see you next time. But you're already in banking. You're just not your own banker yet. See you next time. Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.